U.S. stocks ended sharply lower on Wednesday, with the Dow dropping 1.7%, the S&P 500 losing 2.25%, and the Nasdaq nosediving 3%. Speaking at the Economic Club of Chicago, Federal Reserve Chair Jerome Powell said larger than expected tariffs from President Trump likely mean higher inflation and slower growth. Powell added that the central bank is waiting for greater clarity before considering policy changes. Stocks added to early declines after Powell's comments. Michael Landsberg is Chief Investment Officer at Landsberg Bennett Private Wealth Management.
I think the market hoped that he would be clairvoyant and tell us where everything's going to go. I think there was talk there that the tariffs were going to affect earnings later on, and he didn't necessarily say how much it was going to be, but obviously the idea that it was larger than expected in terms of the tariffs, I think scared some of the market participants to say, hey, maybe earnings may decelerate more than we're expecting.
Among individual stocks, chip makers plummeted due to U.S. trade restrictions with China. NVIDIA shed nearly 7% after the AI chip leader said it would take a $5.5 billion charge due to the U.S. government's limit on exports to China, a key market for one of its most popular chips. Rival Advanced Micro Devices, which flagged charges of up to $800 million, fell more than 7%. And shares of Dutch chipmaking tools giant ASML also dropped 7% after it warned that Trump's tariffs had led to more uncertainty about its outlook.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Tariffs are highly likely to generate at least a temporary rise in inflation. The inflationary effects could also be more persistent. Where we are now, again to your question, is the administration is, as I mentioned in my remarks, is implementing significant policy changes, and particularly trade now is the focus. And the effects of that are likely to move us away from our goals. So unemployment is likely to go up as the economy slows in all likelihood, and inflation is likely to go up as tariffs find their way, and some part of those tariffs come to be paid by the public. One is just the size of the effects, and as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases. So that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation.